Good morning. Good morning from Los Angeles. Welcome to Power Hour. Every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Are you guys sick of seeing red yet? Get used to it. Honestly, it's quite expected. Go into some details shortly. This is the bear market action that we get. Bear markets have their own rhythm and bull markets have their own rhythm. And for 2 years, every dip was bought successfully. Now dips are not holding. And, the anemic rally that we had, which is in the business, we call it dead cat bounce. I don't know why they call it that, but I use it. I'm not against cats, don't get me wrong. And that's what happened. I mean, the rally didn't even get us up to well, the only thing that did, when I look at the charts, not that charts are 100% when the market's, like this, but so far it's looking like technicals are kind of holding. And yeah, I mean, if we do make a lower low, that's going to be the next leg down. How far it takes us, I have my targets, long-term targets, intermediate and short-term targets. It's yeah, it's a tough market, man. You got to keep your powder dry. I did a lot of videos, put it on the channel. It's difficult. It's difficult to trade these types of markets, right? You got to take quick losses if you have losses. You can't just hope and pray that things get better. This is the train that left the station. So, for 2 years, everybody bought the rally. Now rallies must be sold until the market proves itself otherwise. If you're emotionally attached to markets, don't be. It will take you to the poorhouse because things will go lower more than you think they will, just like they went a lot higher than more people think that it would. So it's look, it's an important thing to understand in these types of situations. Technicals and all the other tools you may be using may be helpful, but I think the most important thing is experience. If you've seen this type of movie before, yeah, it's how it goes. And as far as I'm concerned, I'm fine. Actually, my account's still up for the year, up about 13%, which is good. Considering what's going on. And I'm going to open the show up today to the audience, so let me post a link up. If any of you want to show up, please grab the link and please show up. Here's the link. Would love to talk to some of the audience. I'm going to do a little different today. Topics are topics. We can talk about topics to no end. Why is this happening? Okay, a lot of people are talking about it's the sell-off, in expectation of what's going to happen on April 2nd when all the tariffs are announced. Look, man, market's looking ahead. Markets try to price all of this in, okay? The market is the best pricing mechanism that exists, period. There's no ifs, there's no buts. The important thing is keep your powder dry. Cash is a position in these types of markets. It's if you're a long-term investor, this is good for you, right? You keep DCAing, dollar cost averaging, into your pension plans, 401ks, IRAs. If there are stocks you want to buy, you can do some cash secured puts to buy them cheaper. But in this type of market, you must be willing to get assigned because you are going to get assigned. And think, market going down 2% one day does not mean your stocks are going to go down 2% as well. They're going to go, according to their beta, maybe 6%, maybe 10%. Well, we've seen what happened, the carnage in a lot of the high-tech stuff. The Mag 7s are all under 200-day moving averages. The market's under 200 moving averages. My mentors told me nothing good can happen when the markets or the stock that you're dealing with is under its 200-day moving average. That's just the simplest way of looking at it. Many other things go into it, but then The key is to have cash always. There's other opportunities. Markets open, well, I'm gonna say every day, 5 days. Keep your powder dry. Scale in, scale out, size correctly, because when you size incorrectly and keep buying the dip, you're going to go to broke. That's one fast way of going broke. So I had a thesis that I created. Actually, my account's green today. I'm about literally 88% cash. I had a short position in Hood. I closed this morning. I shorted it about 46, 47. I closed it at 41. You got to learn how to deal with it on the downside, just like you knew how to deal with it on the upside. I know it's a little counterintuitive for people to short things, but it's as easy as buying things. I mean, when the market was going up for 2 years, you bought the dip, you buy first, sell later. When you're shorting things, you sell first, buy them back later at a lower price, hopefully. There's no difference for me. I mean, to me, it's like it makes no difference whatsoever. There's a couple other things that caught my eye this week, actually, which I'm going to talk about when I show the charts. As you all know, we have something called VIX, Volatility Index. On the last leg down, when S&P pulled back about 10%, where CNBC called it correction territory. I don't know what that means. 10% is 10%. And NASDAQ was down 14%. Here's the deal. These kind of labels are put on at CNBC all the time, When it gets down to 25%, they go, it's bear market territory. That'll probably be the bottom. I'll put my targets out. I already been talking about it for months. Well, at least a month. Can you make money on the way down? Yeah, sure you can. But there's many ways of doing it. You can short stocks. You can sell calls, naked calls. You can sell call credit spreads. You can buy puts. You got to be careful with the directionals, though, because implied volatility is high. When implied volatility is high, this is pretty difficult, but still you will make money. So that's the way. Those are a few ways to do it. You can also be nimble, right? Because no market goes down forever and no market goes up forever. So actually, I think we're in a bear market short term until the administration's plans are all priced in. Market's pricing in. Okay, first of all, market had priced in a soft landing. Okay, that's out. That's gone. Market took that premium out. That was the first 10%. Okay. Now market's really struggling to price in this tariff situation, okay? Because that's not going to show up right away. That's going to take some time for it to trickle into the economy. Is inflation going to go back up? We'll see. The other thing markets has not priced in at all, okay, is a slowdown. Well, I think it's happening now. And worst case scenario, recession. So since the markets are 6 to 8 months ahead, if it decides to price in a recession, right, where are we going to go? Well, let's look at some numbers. So the S&P 500 is about 5,600, okay? At our high, we were at 6,100. All right, so we're down 9-10% from the high. The estimates for the S&P 500 earnings, so all 500 stocks combined and added, according to their weighting, is still about $260, okay? All right, so if the earnings stay at $260 combined for the S&P 500, let's take a look at it. So we're at 5,600 divided by 260. That's 21.5 PE. Historically, that's pretty high. Now, at 21.5 PE, if the rates were going lower, it may justify a 21.5 PE. Well, rates are not going lower either, although I'm going to have a lot to talk about it because that's the position actually that's green for me today. But you guys probably already know the thesis that I created, my members know. And today it's working because it's flight to quality. Okay, now, if the $260 earnings on S&P 500 is not going to be correct, right? if that number is going to get ratcheted down, because if we do go on a slowdown, there's going to be earnings disappointment. Tariffs, are they going to hurt earnings? Most likely. But at the moment, market selling at 21.5. I'm not a huge PE fan. I don't look at it because things have changed. In the old days, it really was true. Today, not much. This market is not the same as it was in 08. This market, because a lot of people on online, especially, I mean, these buffoons, they go, oh, this is what's going to happen. This is a lifetime of a buying opportunity. I'm like, none of these people have seen a bear market, extended bear market. They haven't experienced it. But again, so going back to the earnings, 260. That's the estimate, average estimate. They're as high as 275. They're as low as 250, 245. So let's take the 260 average, 21.5 P, historical P on S&P 500 with the interest rates that exist at the moment is about 18, 16.5 to 18. Well, on 260, assuming 260 stays the same, and we take an 18 PE on it, we put it, that's 4,700. We're at 5,600 on the S&P. I don't think that's going to happen, but what I think is going to happen, we'll probably keep to 21.5. But if the earnings start getting cut on the S&P 500, what if we cut the earnings from 260 to 245 and put a 21.5 PE on it? We're at 5,250. I think market's going to go down to about 5,000 on the S&P 500. Tariffs are going to hurt earnings. I mean, there's no ifs and buts about it. Now, there's other things that's happening. So markets, as I said, is the best pricing mechanism. It's pricing things in, okay? And then you guys are going to say, well, it's overdoing it. Like, there's no such thing. Market's going to figure it out. So the price that you see is the price that you see. It may be wrong. It may be right. You will find out if you transact or buy a stock. If you buy a stock and it keeps going lower, you're wrong. Okay. But I don't panic. I've seen this movie before. I was ready for it to start with. Hopefully you guys listen to, as small as my audience is. I'm doing it just to get my thoughts across. I am not, is this a bear market? Let's call it what it is. If we make a lower low, yeah, it's a bear market. What do you do in a bear market? You be quite nimble. If you still want to trade on the long side, you wait for your spots, because let me tell you something. On bear markets, the counter trend rallies that we get are face ripping. Actually, they are stronger and more violent than rallies on a bull market. So if you have your powder dry, you're quite nimble enough, you get in. If it's wrong, you get out, take your small hit. You get in. If it's wrong, take your small hit, get out. Because you're not going to be able to catch the low. You may get lucky once or twice, but what you're looking for is signs, divergences, things like that. I'm looking at those things. But the price doesn't lie. The price is what it is, what's in front of you. You have to trade that price. You can't have personal biases, right? You can't go, I love this dog. One day it will go up. It probably will, right? Because over long periods of time, the markets have done wonderfully well. The fact that the market's done 25% plus return, and I'm talking the indexes, last 2 years, and some other stocks have done 3x, 4x, that's over. So now, you want to trade on the long side, you have to be nimble. You have to be able to hit singles. You can't be a pig. Bulls make money, bears make money, pigs get slaughtered. So don't forget that. But the most important thing is size correctly, keep cash around. Am I too conservative at the moment, having 85% cash? Yeah, for sure. But where am I going to deploy my money? I'm not going to put it in T-bills. This is a trading account. I have an investment account. This is a trading account. I need to trade to create a return. But then trying to create that return, forcing things is going to hurt. So you be patient. You wait for your spots. If you're working on technicals, if you're working on data, all different things, right? But I highly recommend at all times in markets like this, keep about 50% cash. I would say if you're really aggressive, probably between 30 to 50% cash at all times, and commit, size correctly, you'll be fine. Because one day, all this will be over, because bear markets don't last that long. The worst bear market lasts 18 months, and that's like a prolonged, and I don't see that happening. In today's markets, speed is the issue, right? All this 10% correction 10 years ago probably would have taken 2 months. It's been like 3 weeks. It's 10, 12% already. So you need to understand, you need to get used to the speed. And one last thing about markets is that will the powers to be, right, the administration, the Fed, will they allow the market to tank? No, they can't. What they will do, though, is that they will step in at some point. So we know what the Fed is saying. So this is where the macro, you can't trade short term on macro, but you need to understand the macro. And that's why I'm putting on the trade that I'm putting on. I've been talking about it for the last 2 weeks, and I'm scaling in now. I scaled in, and I'm going to keep doing it. And that's going to probably be my best trade of the year if I'm proven correct. And I'm willing to commit 50% plus of my account, and I have a 6-figure account. So 50% of my account to that trade. I'd rather do one trade that is absolutely the right thing to do. And then, I'll meddle around with the ins and outs like I did with Robinhood. I shorted it on Monday, Tuesday, and then I bought it back today. 5 points, 6 points, 10%. And I shorted the shares. I did not trade options. If you say, well, Sergio, I can't short stocks because of this, Robinhood won't let me, I don't know, then switch brokerages. Yeah, I mean, I'm okay with it. But I get a chuckle out of, these newbies that show up and they go, oh my God, we're crashing. I'm like, we're not crashing. We're going down. We're just taking legs down. Last but not least, I think it's going to be a multi-leg down and probably at least 3 legs. Market's going to go retest now. The lows. Triple Qs are pretty on top of it. SPY or SPX, not so much yet. We'll retest. We'll see what the technicals look like at the retest. We may make a lower low. There is a possibility of bullish divergences developing actually on the MACD and RSI, so pay attention to those. But those again are lagging indicators. Tell me what the market's going to do tomorrow, then I'll tell you what to do. But again, technicals work because pretty much everybody watches it. I don't think institutions care about technicals whatsoever. I don't think market makers or dealers care about technicals. They look at Greeks and they trade options in the millions because that's where the money is at. 0 DTEs, weekly options, that's where all the trading is at. Well, dealers are not in it to lose money. They know what they're doing. They watched gamma levels, they watched delta levels, they hedge, they go delta neutral, and they're in the business for a reason. They're not in the business to take your other side of the trade. They're in the business to make money, and they know how to make money, and I don't think they look at charts. What they look at is, they look at data, where the money is coming from, where the most valuable contracts are on a daily basis, where the dark pool levels are, these things you guys got to look at. If you're going to trade 0 DTEs, God help you to start with. Although, starting next week, I'm going to start trading 0 DTEs with, I've been following quant data. I mentioned that before. They don't look at charts whatsoever. They look at GEX, DEX, well, gamma exposure, delta exposure, MBCs. It's data driven. Charts. They call charts chopsticks. So I'm going to start trading some 0 DTEs, not directionally as much, but more especially on SPX, which is the cash index, because they settle cash if you end up going in the money, right? And they're very liquid. They are very tight bid and asks. So how I'm going to do that is I'm going to do call credit spreads, put credit spreads at certain levels with the data that I'm seeing, because that's important. That's what I think most institutions and dealers and market makers trade on. But will I trade individual stocks? Absolutely. Will I short some? Will I buy some? Yeah, I'm not going to change anything. I'll just trade what's in front of me. So if any of you want to grab the link, come on. You're more than welcome to. If none of you want to show your face, fine. That's what we'll do. So let's go to, if you have any questions, put it up. Let's go to the charts. Hopefully you guys can see this. Can you guys see this? Please put a thumbs up if you can, and then I'll go there. Something is wrong with YouTube today. I don't know what's wrong with it, but whatever. Or StreamYard. Can you guys put a thumbs up, please? No? Okay. Well, I'm hoping you guys see this. So, yeah, I mean, we're just on our ass. I mean, SPX down 2%. NASDAQ down 2.6%. Let's look at some charts and talk about it. I'm not going to go buy anything today, honestly. Friday, Monday, Tuesday. So the bear market rhythm is weak at the end of the week always. And today is the last day of window dressing, so we may get a pop at the end of the day, actually. And we'll see. We'll see how that goes. Although this weakness doesn't tell me anything that it's going to be that way. So this is SPX. Look, I mean, what does that look like? I don't know. It doesn't look that good, does it? SPX, or we're going to do SPY, same thing. 1 year, 1 day. This is SPY. So I have 3-4 lines drawn. I'm not a huge fan of drawing lines, but I like it. So we had a channel that we've been in for a year and a half. We broke out of that about 585. We're at 555. We went from 613 high on SPY to about 550 low, 10%, bounced only about a quarter, a third of the way. That showed me how anemic or how weak the market is actually. We bounced back to the 200-day. We just could only bounce to the 20 EMA. We didn't even get anywhere near the 50 EMA. I was hoping we'd get a rally about 580 range. Actually, we almost got there, 576. Rolled over. Okay. So MACD had given a signal. The only positive thing that I can see here, if we do retest or make a lower low, and if MACD does not make a lower low, that'll be a bullish divergence. Then we may have short-term bottom. Doesn't mean we bottom for good. Doesn't mean we're going to go make all-time highs. So that's SPY. Triple Q looks a little different. Triple Q is actually almost there, retesting the low. Triple Q being NASDAQ 100. Super anemic bounce, really. This totally dead cat bounce. In fact, to my members chat group, I sent these charts. I go, if you read your technical analysis books, what pattern is that? And a couple of them correctly said it's a bear flag. Well, that sure was, and we're breaking that flag today. I didn't draw the lines, but it doesn't take a genius to figure that part out. So triple Q's went from 540 down to 465. So that's about 13-14% pullback. We bounced really, really anemically. We just got up to the 20 EMA, which just crossing actually the 200 EMA to the downside today, which is the first cross. Like, you're going to read and see on death cross and this and that. I'm really not a huge pay attention to these types of things. But charts are good just to see what happened in the past. Will the patterns repeat themselves? Sometimes they do, sometimes they don't. So triple Qs are actually pretty close to their lows of 466. We're at 469. MACD is rolling over again. We're under zero. That's the key though, right? When we're under zero, market's weak. When we're above zero, market's strong. Let's see if we get a, my money says we're going to go make a lower low. We're going to go down to probably on this leg to about 450 range on the triple Q. So we got about, I don't know, another 3-4%. MACD won't make a low. If we do turn up from there, that's your bullish divergence. That you got to really, that's a tradable rally. You got to pay attention. With the rally that we had, you might, if you did get lucky, good luck. I mean, I did get lucky. I was short TQQQ puts, which is the 2x ETF of the triple Qs. TQQQ is actually making a lower low. So that goes to show how much slippage there is in these things. That thing got exactly up to the, tag the 220 EMA rolling over on TQQQ. That's the ETF, by the way. That's why there is slippage on these things. I think TQQQ is right into support here, but I don't think it's going to hold, obviously. I think we're going to go about 50. At 50, I will give it a crack. We're at 57. Yeah, I mean, that's where the markets are at. So before I forget, let me talk about this. So if you guys, as you guys know, there is an indicator called VIX, which is called the volatility index. Okay. So I'm going to leave I'm going to put the SPX chart up here. This is SPX. I'm going to leave SPX up here. As I said, starting next week, I'm going to start trading 0 DTEs on these. They're very liquid. Not too many directionals, but call credit spreads, put credit spreads. If you guys know, you know. If you don't know, go check your books that I recommended on option trading. So this is SPX and this is VIX. So VIX is a counter indicator, right? When the market's going down, VIX is going up. When the market's going up, VIX is going down. We agree on that, correct? Okay, so this is the VIX chart, okay? Today we're taking off. We're about 22. But do you guys notice what's going on VIX? Last time, this is last August, when we had the Japanese yen carry trade crisis. Do you guys see what happened to VIX? VIX got up to 65. And then when we had the next correction, VIX didn't even get up to 30. And on this 14%, triple Q and SP and 10% SPY correction, VIX again didn't get up over 30. There is something going on that I'm really trying to figure out. So this is VIX, 1 year, 1 day, same duration, same thing. And this is SPX. You guys see what's happening here? SPX search, SPX. There's SPX. Okay, you guys see what's happening here? So this was that August, right? When we had that mini crash due to the carry trade. And the VIX got up to 65. Okay, on this pullback here, that was September 8th. That was the last time Fed cut the rates. Market tanked. VIX got up to only 30. This time, this extended pullback we're having, VIX is only 22. There is something going on. So what's happened? My money says that we need to get used to, because a lot of people were used to low volatility for a long time. So VIX spending time between, let's say, in this range, maybe 15 to 20 range. I think now we're going to be in a range of 20 to 30. So that's increased volatility. So VIX is turning up now, meaning market's going down. Well, VIX is only 22. If VIX gets to 30, where's the market going to be? So pay attention to this, because if VIX goes above 30, I think we will get a crash. And that may be your capitulation bottom, short term anyway. So pay attention to VIX, pay attention to the relationship between VIX and the market. So the trade, my thesis that I've been talking about for a month now, which I started actually opening positions this week. FYI, all my positions are posted Monday, Wednesday, Friday on the community page of the channel. So I've been talking about TLT. TLT is the inverse 10-year note, 20-year bond indicator or ETF called TLT. So My thesis was that this is TLT, by the way. So when TLT is going up, that means interest rates are going down. When TLT is going down, that means interest rates are going up. As you guys can see, the labels on the left side, the trade that I put on, I'm up to 15 lots. I'm going to commit literally half my account size to this trade. It's a long-term trade. It's a patience thing. TLT doesn't move like Tesla. So you got to be patient. But then here's the thesis. The thesis is 3 out of 4 things is going to benefit this trade. One, first of all, like today, TLT is up 1.5% while the market's down 2.5%. It's called flight to quality. That's one. Number two, if the market's pricing in a slowdown or worse, a recession, we'll see what happens. We'll find out within the next month or so. Interest rates are going to go down. When the economy slows down, what is the Fed going to do? Fed's going to start printing. More than printing, they're going to start lowering interest rates. Okay. That's number two. That's positive for TLT. At the moment, the 20-year note is about 4.35 today anyway. Big move down on interest rates today. And I think the rates are going to get down to probably 3.5 range within the next 6 to 8 months. And hence, that's what I'm doing. I am creating a position to benefit from TLT going to 110. We're at 90. So if you guys look at the long-term view of TLT, this is 3 years. And let's go longer. Let's go all time. So then I'll go to the chart. No, I'll go to my position screen, explain the position, and then you guys figure it out. By the way, none of this is trading or financial advice at all. If you tag along, do it at your own risk. So this is TLT, going back to 2001. So 2001 to 2018, especially from starting with the 08 financial crisis, this is the average interest rates right here. TLT is average about 122, 123. That coincides about 1.5%, 2% 20-year bond, okay, or 2% bond. Then the pandemic hit, we got up on TLT to 180. That's the zero interest rate policy kicked in, right, in 2008. So that's 180. Now we're 80. Well, we're 90 now, okay? All right. If you guys can look back here, all the way back to this chart, left side, in 2001, 2002, TLT was averaging about 85, 86. And we got down there again. So that's when the inflation kicked in due to the economic policies, fiscal policies, and TLT went from 180 to 85. So that means rates went from 0 to 5.5. Okay, so we're about 450 now. I'm thinking rates are going to be about 3.5. Okay, the scenarios are administration is slowing down the economy intentionally to have a booming economy when they exit in 4 years. That's helpful to TLT. Economy automatically slows down. Consumer spending is not going to be there because consumer is stretched as it is with credit card debt, which I put a great video out on it yesterday. That means lower interest rates. That's going to help the TLT trade. Number three, flight to quality. Market sells off, TLT goes up. But that's short term. And the fourth one that's not going to help is tariffs kick in. Inflation goes back up. Fed doesn't cut rates. But then we're going to have something called stagflation. There's no cure for that. That's going to be the only thing I'm going to watch for. So 3 out of 4 things are helpful to this trade. This trade that I'm putting on is a long-term trade. Here's my position screen. I have literally just one position. I'm literally 88% in cash. So here's what I'm doing with the TLT. As you guys can see, I will post this today to the community page if you can't see it. So what am I doing? 85 was the low, or 83, 85 was the low on TLT when the rates got up close to 5% of the 20-year, okay? This is the long end of the curve. There is IEF, which is shorter, which is 7 to 10-year note area. I'm not messing with that. I'm doing with TLT. Because I think the long end of the curve is going to go down, not as aggressively as the short end, because that's what the Fed does. But I think the long end is going to tag along. We get down to 3.5%. If we get down to 3%, TLT will be about 115. If we get down to 3.5, it'll be about 110. So what am I doing? Okay, so I don't like putting too much of my money at risk on types of trades like this. So I'm going out to March 2026 options on TLT, okay? As you guys can see, I have 15 of each. You will see a plus 15 and two minus 15s. Let me explain this. I have 357 days to go. Why am I doing March? Because, well, I'm thinking this is going to take some time for the economy to slow down or go into recession. Fed cutting rates is going to take about a year for all this to play out. And I'd rather have this trade on than be a stock jockey with 50 different things. I will still do that, but this is going to be the core. So the thesis is 3 out of 4 things is favorable. So what am I doing? I'm going selling March 2026, 85 puts, selling the puts, okay? Turning around with that credit, buying March 2026, these are leaps, buying the 95 calls on TLT, and I'm turning around again and selling. So there's 2 sell sides, 1 buy side on this trade. And it's all done simultaneously. If you have a platform like Thinkorswim or Robinhood even will allow you to do this, you have to know how to do it, but I'm doing it simultaneously. I'll even walk you guys through. So again, none of this is trading or financial advice, okay? So, and I'm selling the 110 calls, again, March 2026. So overall, I'm able to do this trade with a credit, meaning somebody's paying me to play. Now you're going to say, what if why are you selling the 110 calls? You know, what if TLT goes to 120? I'm okay with it. I'm starting with a credit of 50 cents to SI. I did some yesterday at 105. March. Okay, so let's look at the results. I mean, actually, let me just go through and show you guys how I'm doing this on Thinkorswim. So if you do have Thinkorswim, you'll know. So first I'm going to March 2026 right here. This is the option chain. The way you do it is you go click on sell 85 put. That's one. You scroll up. You go to the 95 calls right here. Buy. Push control on if you're doing it on a computer. Push control and buy. So that's the second leg. And then I'm going all the way to sell again. Control, push control. Sell 110. So it created a 5 lot because my minimum is 5 lots on Thinkorswim. I can change it obviously. So at the moment, you can do this trade with a 30-cent credit. So you're getting paid. So what can happen on this? 3 ways to look at it. TLT stays exactly here until March 2026. Everything expires worthless. What are the odds of that? Pretty low, but I'm just giving you the scenarios. Everything expires worthless, but you took in 30 cents to do it, so you're going to make 30 cents out of this deal. Okay. However, if my thesis is correct and rates go down to 3%, TLT will get to 110. In that case, the 85 puts will expire worthless. The 110 calls will expire worthless. The 95 calls will be worth $15. Well, that's 15x on this trade. Doesn't mean that I'm going to wait to 110. If it gets to 108, it will be probably 6x. So that's the upside. And that's 2 out of 3 again, positive. Well, let's look at the negative. Let's say tariffs kick in, inflation goes up, Fed raises rates, and TLT tanks. Okay. I don't see that happening. However, that's the downside. But I'm at the 85 level. We're at 90 and change, 90.22. Let's say by next March, TLT is 85 or below. I am going to get assigned TLT shares. Okay, I'm willing to buy them. So at the moment, my averages are, and these averages will change because I'm going to add on the way up. I'm going to add on the way down. So what are my averages? Let's take a look. Okay, so far I have sold 15 of the 85 puts with an average of 323. That's the cost. They're 301. I mean, this trade is positive by about $700 already. I only have 15. As I said, I'm going to go heavy on this. I bought 15 of the 95 calls with an average cost of 347. They're 382.5, and I sold the 15 110 calls with an average cost of about $1. They're $1.11. So I'm up $460 on the long puts, up about $275 on the short puts, and down on the 110 calls. Great. So that means I did this trade with an average of, let's take a look at it. So 322 on the puts, 347 on the calls. That's 25 cents. So I did this with an average credit of about 75 cents. Okay. I did more actually today at 45 cents. So the point I'm trying to make is this is the thesis. This is how you structure a trade. You can do it with different options, but I'm willing to hold this trade for at least 3 to 6 to 8 months, because I think TLT way before March of next year, if my thesis is correct, is going to be about at least 110. And that's a 15x return. And now you're going to say, well, yeah, they're paying you, but you're putting up money. Absolutely correct. Let's look at the requirements for this trade. As you guys can see on the right side, oh, this is the Robinhood short trade, by the way. That's all zeros now. Yeah, I was short 46.47. It's 41.38. Well, I closed it right about 41. I had also sold the puts. So that's I'll explain that in a minute. That's another way you can do it. So that's like cover call. This is called a cover put. So on a cover call, you buy the stock, sell the call options. You may get called away. On a cover put, you short the stock, sell the puts, and then you will get assigned. They will close your short position. If you guys don't understand this, please put it in the chat. I'll try to explain it. Going back to the TLT trade, so I have 15 lots of all the same. 2 minuses, 2 sales, 1 purchase with credits. Okay. Now it's costing me, I'm not paying it. I'm not paying interest on this. I have the money in the account sitting. So it's costing, for these 15 lots, it's costing about $17,265. So let's take 17,260, and that's going to get marked to market, by the way. So let's take, at the moment though, 17,265 divided by 15. So each one of these options is costing me $1,150 in buying power, and I'm getting paid. You're going to say, well, you're not getting paid anything. I'm like, it's okay. I'm not doing it. I'm doing it for appreciation more than, getting paid, but I'm at least getting paid something. Again, this is in the margin account. You need to have level 3 to do this in brokerages like Robinhood and Thinkorswim or Schwab or whatever. So it's about $1,150 a piece to do this at the moment. Okay. And obviously I can close this before March 2026 comes. Or what if TLT goes to, I don't know, 100 in a month? Okay, well, it'll be a 5x trade actually. And the way you close it is you close it exactly the opposite way you opened it, or you can leg out of it, do whatever you want to do. But I would suggest do it all at once, just like if you're going to put the trade on, do it all at once. So that's it. That's the trade. And I think I believe in the trade, and I think I'm committed to the trade, and I'm going to continue adding on the way up and on the way down. Yesterday, I added when TLT was 88. I added more. Scale in, scale out. That's why my cost is 75 cents. Right now, we're at 30 cents. Now, if TLT goes higher, I'll do them with debits now. If TLT goes to 92, it'll be like, I'll probably have to pay $1 debit to do this trade. Or I can skew the options strike prices higher to still do them at a credit. So there's many ways to do this. If TLT goes to 95 and I want to add to the position because I'm thinking it's still going to 110, then I'll do the 95 puts or 90 puts, 100 calls, 120 calls, right? You can always move things around. It doesn't have to be exactly these strike prices, but the expiration, I'm going to stay with March 2026. And let's go to the charts one more time. And let's look at some names. I'm still bullish on Chinese names. I'm not giving up on that. Let's see where the market's at. I may actually, as of Monday, oh, by the way, this is SPX going back to 19, 62. You guys see what's happening over long periods of time? Yes, we have these corrections, massive corrections, 40, 50, 60% sometimes. This is the 2000 bubble, right? Triple Qs, SPX went from 1500 to 808. That's about 50%. Then we had the 2008 crisis, 1600 down to 700. That's about 50%. Then we had the pandemic, 3400 to about 2200. That's about 30%. Then we had the interest rates going up crisis because we pumped too much money into the system. Then we went from 4,800 down to about 3,500. That's about 25, 30%. And, you know, my expectation is about the same thing. I think 4,800 to 5,000 is pretty correct. The other thing is on this one, MACD is turning down. Got to be careful here. So it's SPX. So what I'm going to do with SPX, I mean, we're on our ass. We're not even rallying. So end of today may be ugly. This is the 2-minute chart on SPX. I'm going to trade off of quant data. Again, not looking at charts. So today, I didn't do any trades, but I was already ready. Then their data was showing that, you know, market was short delta. And the MVC today was, I think, 55.50, and we got almost there. And so if the market's short delta, what does that mean? You do call credit spreads. You sell call credit spreads. How do you do a call credit spread? Let me explain that too. These are all the tools I'm using. Now, this may be complicated for some of you, but then it's okay. You guys have to get used to it. So let's take a look at how you do a call credit spread. In fact, at the moment, SPX, I'm going to do it only on SPX. I'm not going to do it on SPY. You can do it on SPY, but the settlement is different. I forget. I go in the money. You know, this cash settles at the end of the day. I'm going to do it with 0 DTEs or weeklies mostly. So index is 5580. Okay. So let's take a look at it. So how do you do okay, if I think the market's going to go up from here, let's say, you do a put credit spread. How do those work? Well, you decide on your wings, but I go usually 10 wide. So here's the way that you do it. Or you can do iron condors, right? Iron condor is you sell a put credit spread, you sell a call credit spread, but when the market is this volatile, you're going to get caught with one side or the other. So just go with the trend, go with what the data is saying. So at the moment, we're at 55.82. So let's go, if I go to 55.50 for today's expiration. So you go sell 55.50s. This is how you do a put credit spread. And I'm going to go then to 50 and then buy the 55.40s. So that's giving me 75 cent credit. Okay. And what is that going to cost me to do each option? So mine set up for 5. It's going to cost me about $4,680 to do 5 options. So about $900 an option at Thinkorswim. That's the requirement, or it's going to use that much buying power. And I'm going to take in $350 until the end of the day. So now, if the index is above 55.40, they're going to expire worthless. I mean 55.50, right? And the 55.40s are going to expire worthless. But then there is a max loss here. So since I'm 10 wide, if index ends up at 55.50, fine. But if it's anything under 55.50, then you're looking at a losing position. You may have to roll it to Monday, or you may have to roll it to keep the credit going, right? Initially, I will take losses. I will take quick profits and quick losses on this. I will not let them expire because the decay does not happen all the way to the end of the day. They will make you watch this. But then if you correct, like today, let's say, if you did call credit spreads all the way down and keep rolling them down, taking profits, rolling them down, you're swimming in cash. And their data was showing that market was short delta. So you just do that, do call credit spreads. You don't try to pick a bottom. So that 55.50, 55.40, now you're going to say, Serge, it's 55.50. We're at 55.78. Yeah, what about it? I mean, that's 28 handles, right? I mean, that can happen in an eye blink of an eye. So, you know, it's not that much. So the same trade now is at 90 cents. If I had sold that put credit spread at 70 cents, we're losing money already. Now they're $1.10, right? So the market goes down. However, you're kind of covered, right? You're short so on a put credit spread, you're short the closer strike to the index price, and you're long the equal amount of a lower strike price. Okay. And the difference is going to be your loss. So I'm putting up 4,500 to take in close to, like, at the moment, about $450. That's 10% to the end of the day, which is, we got 2 hours to go, right? And most likely the index is going to be about 55.50. I don't know. I haven't looked at their data lately because I was getting ready for the show. But that's what I'm going to do. I'm going to put credit spreads, call credit spreads, add a little bit more tools to my arsenal. So that's where we are. And this is the 2-minute chart of SPX. I mean, we started open weak, a little bounce, and then flush. And yeah, I mean, we're going to probably go retest the low. Not probably, most likely. And here's the 1-day, 1-year chart. So let's go through some charts. There are some stocks that I like that I'm going to buy or trade anyway. Yeah, we're going to go retest the low, I think, at most. And I think we're going to go make a lower low. By the time SPX does that, triple Qs are definitely going to go make lower low. Here's Apple. I'll just go through a few charts. Here's Apple. Apple's actually hanging in there, but that probably will retest the low as well. Under is 200 EMA. Let's go to the Mag 7s real quick. This is Google. Ugly chart, really. It's been under its 200 EMA. Bounced to the 200 EMA, making a lower low now. Okay. Not good. Microsoft has been weak for months now. Again, same thing, making a lower low already. While Apple is not making a lower low, but Microsoft and Google are making a lower low. Microsoft has been so weak. It's been weak actually way before the market started. So not the best looking thing out there. Again, if you're dollar cost averaging, I think this is wonderful for you. That's Microsoft. Let's look at NVIDIA. Here's NVIDIA. That's going to probably retest the low. It hasn't made a lower low yet, but it's rolled over for sure. What it exactly should roll over from the snapback to the 200 EMA, roll back under. What else is in the Mag 7? Tesla. Is Tesla in the Mag 7? Yeah, that's Tesla. Tesla had a wonderful bounce from 220, which I traded over TSLL. Now it's kind of rolling over. Retest probably was coming on that as well. Another thing is let's look at because Soxel is something else that I'm looking to trade short term. Here's AMD. I think AMD may have bottomed on the retest. I will sell some puts on that. Here's one of my favorite stocks, AST Space Mobile. Pulling back to the 200 EMA. I'll give it a crack about 21. I'm not buying anything today. Here's Avago. Lower low. See? This is the other thing, by the way, you guys need to pay attention to, right? Underperformance, outperformance. Stock doesn't bounce when the market bounces. On the first next leg down, market is not even retesting the low. This is making a lower low already. So 160 is probably a good spot here. That's why I'm looking at SOXL, which is the 3x ETF of the SOX index. We're at 1574. You're going to say, Serge, there's no chart here. Well, there is a chart, but you have to look at the 3-year. Again, there is slippage on these if you're trading these ETFs. You got to be really, really careful. Here's the 3-year chart. So where is support on SOXL? Maybe like 13, 14. I mean, I'm going back like to 2022, right? And it was down to 6. So, no rush. But, these will have rip-roaring rallies. I'm not concerned. I'll trade. I will trade. I mean, it's not a miracle my account's green for the year. Again, I'm not trying to boast or anything. The reason it's green is because I manage risk like ridiculously well. Okay, here's Baba. Holding like a champ. I'm hoping we get a push to maybe 125, 128. I'll get back in. If you don't want to do that, then you can go into 2x ETF of BABA, which is BABX. It's about $35 stock, 45 to 35, 32, 35 range. I'll be a buyer. Here's one of my favorite stocks, BE. Getting there. I mean, kiss of the 200 EMA would be wonderful on this. Right about 20. We're at 2044. This is a stock I'm definitely going to buy. I'm not going to trade options on this. All throughout this pullback, stock is holding, right? Again, outperformance, underperformance, right? On the Chinese stuff, Billy is definitely another one I'm going to buy, the stock, not options. Hopefully 18.5, 19 range. We did trade that wonderfully, so I'm good there. Kava is something I'm looking to get back in. I had cash secure puts in my investment account. Those expired worthless, luckily. Well, not luckily. I wanted the stock under 80. So this is showing me outperformance, right? So market's it's going to try or retest lower low. This is nowhere near it, right? Conversely, if you look at some of the Mag 7 names, they're already making lower lows without the market testing the low, right? So be careful with all that stuff. Pay attention to that. DoorDash, I wanted to short worst way. Yeah, I think you can short DoorDash on any rally. Again, you got to get used to selling things on rallies now. Buying things on pullbacks. I think Google, is getting to the point that I may even be interested in Google. Honestly. Selling some cash secured put short term, probably. I mean, you may get to 150, but I think I'm really interested in Google at 150. And then, we'll give it a shot. Robinhood. I covered my short at 41. As you guys can see by those labels, I don't know, I think our swim puts those labels there after the trade is finished already. Vic, is there a way to get rid of it? I know there's a way to get rid of the labels, but it says show trades. I go, I don't want that, right? I go there, apply, and okay. And then I'll put it back next time. The trades will be there again. I don't know what's going on. Another one people were extremely bullish on. Oh, by the way, so here's the downside, okay, people? Robinhood, I love the company, 67. It corrected to 35, 32 points. While the market went down 14%, this thing went down 50%. Bounced beautifully where it's supposed to bounce. Now we're pulling back. I will definitely be a buyer of shares of whatever I need to do in Robinhood, about 35. I like it quite a bit. So, there's been like some nice wide trading range opportunities for everyone here. Here's another disaster, hims and hers. You guys remember this is 73? Yeah, we're at 29. We're at 30, right? Again, showing weakness, making a lower low while the market hasn't made a lower low yet, right? This is what you guys need to pay attention to. What else? Financials are getting sold off. All that stuff is getting, let's see, JP Morgan. Yeah, it's actually outperforming, right? By the time market makes a lower low, I don't think this will make a lower low. So that's one stock to look at. Goldman Sachs, same thing. Goldman Sachs is weaker than JP Morgan. So I'd rather do JP Morgan if you're going to get into financials. But then there's SoFi. SoFi, definitely I will trade for a $10 number. It's a pretty active trader. So 1177. It got down to on this okay, so this was a $17 number. It pulled back to 10.5, 6.5 points on a $17 stock, 60%. That's what the market does. You walk up the stairs, take the express elevator down. Then from 10.5, we bounced to 13.86, 14 almost, 30% rally. And then now we're down to about 1177. Okay. Retest of the lows. I'll trade the stock. Just trade the stock. You don't need to do anything else. How can I forget about MicroStrategy? MicroStrategy. Bitcoin is getting killed as well because risk off, right? I like MicroStrategy actually. On any pullback I'm going to buy, but as you guys know, I don't trade MSTR, I trade MSTU. And here's the 2x ETF. 560, yeah. And anything about under 5, I'm a buyer of the shares. This thing hit 748. No, Oh my God, this thing was like 818 3 days ago. We're at 560. Yeah, I'm definitely about 5 or under on this. Just trading, man. Just trade. Here's the market. Here's a bear market. Look at Nike. Down to 63. I mean, okay, people are going to go, oh, it's a great company. Yeah, okay. Well, look what happened in Nike. Nike has been in its own bear market for the last, I don't know how long, man. 3 years, 4 years. Look at that. If you look at Nike, you wouldn't know market went up 50% last 2 years. So you got to pick your pain. You got to be really careful. More importantly, you got to be careful with selling cash secure puts these days. You must be willing to get assigned because they will nail you. Things go down really fast. And I showed NVIDIA, right? Yeah, I did. I like NVIDIA, actually. That's kind of outperforming. That's going to... So trade whatever is outperforming now. When the market does bottom and bounce, those are the ones that are going to fly first. This is the nuclear stock that we were short in my group and I, and look where it's at. I can buy enough of it. 59 is 22. Nobody wants it. Okay, cool. Palantir. That's Palantir. 75 to 100 rally, 25 points in a week and a half, 2 weeks. These are good traders, man. You just gotta pick your spots and be nimble and trade. Reddit is another good trader. Acting weak though. No, not interested. There's a big old gap down there, about $80. It's about 105. No, not interested in that. Root. Oh, okay. I am interested in this. This stock was making new highs when the market was selling off, by the way. This is an AI insurance company. I'm interested in about 125, right at the 50 EMA. This goes how strong these stocks are. Yeah, I'm definitely interested about 125. We're at 138. So if we do get a little whoosh next couple of days, this will take it down to the 50 EMA. And I will enjoy buying this. So there's things to do. There's always things to do. What else? SoFi we looked at. Soxel we looked at. Everything else we looked at pretty much. Here is TEM, Tempest AI. All the AI stocks are getting shot. And there you go. Tesla we looked at. TSLL, same thing, Tesla. TSM, Taiwan Semi, part of Soxel. That's making a lower low. A lot of these, see, where is SOX these days? SOX probably is making a lower low. Yep. There it is. It's making a lower low while the market's not making any. Yeah, you guys, there's signals here that I'm not liking, but then, a couple of my favorites that I had sold cash secured puts on, and they all expired last Friday. I'm not touching them. Acting weak. This is Upstart. This is Affirm. Maybe I'll touch Affirm. I don't know. Here's another one. Yin is a 3x bull ETF on China. If you don't want individual stocks, you can do it in Yin or you can do it in KWEB. Those are the ETFs. That's the non-leveraged ETFs. So, but they've done well, right? So I'm still bullish on China. Very bullish on China. TLT I showed, I explained. I think that's about it. So I'm looking at outperformance. Whatever is green today already on my screen is going to be a lot more green when the market bottoms and turns around. So you go with the flow. Here's SPX. Let's see if we did bounce at all. Yeah, we bounced a little bit. But again, I don't know. I don't trust any of this. See that cash, that put credit spread would have worked out already. It probably would have been 50% profit already on that. So I'm going to give it a crack next week. Small size, 5s and 10s. Do some put credit spreads, do some call credit spreads. And take small hits, take small gains. I'm not a day trader. I don't want to be a day trader. But why not? The only way to do it is to test it. So that's a new tools in my toolbox. Okay, so if you have any questions or you want to come on, I'll put you guys up. Let's see where we are. Okie dokie. All right, good morning, good morning, good morning. Anybody want to come on? What do you mean? What do you mean StreamYard is not allowing you? Well, grab the link. What is this saying? I know there's something wrong with StreamYard today. Let me put the link up again. Here's the link. Here's the link, sir. Yeah, you gotta, you and Bill Ackman, you too. You too. Good morning, John. Well, VIX being steady is not a good thing. So I pick it up, Marcio. Let's see if you can do it. I don't know why it's not present or invite. Yeah, that's on your end. That's on your end. Yeah, when it does that, it's on your end. Or you may have a firewall up or something. Yeah, it's on your end. Yeah. Good morning, everyone. Well, VIX being steady is not a good thing. Next time VIX gets up to 30, market will be lower. But if that's the range that we're talking about, I think this gap down isn't being delivered. Yeah, I don't know. Well, exactly. So that's why you should come on and we'll have a good conversation for our group here. Hope you did the TLT trade. I'm legging in. I'm going to keep doing it. I'm going to keep adding. Yeah, you and Bill Ackman have to be super patient on Nike. I mean, I don't know. I mean, technicals are technicals. Look, you just got to do what you got to do. But let's see. What else? Anybody else? Anything else? Invite guest. Huh. Is that the same link? Copy. And here's the link. I think it's the same link. Yeah. Same link. Same damn link. John, good morning. You're DCAing, I'm pretty sure. Keep doing what you're doing, bro. No panic here. Vic says he's a good student. I sure hope so. I hope so. I hope I'm a good teacher. No, that's not true, actually. You know, go visit their free server. They have a Discord server. It's free. You'll learn quite a bit. SPX credit is not better in the morning. Data decay doesn't happen until maybe like 2.5 hours into it. You may even lose money, actually, if you do. I mean, unless you're putting directionals. If you're just doing like iron condors and things like that, data decay on the daily, on the 0DTs doesn't happen until almost the end of the day due to increased implied volatility. But you need to, I don't want to argue with you, but if you do PCCs and CCCs, you need to be really, really careful with those. Okay, he's starting their computer. I'll wait. Any other questions? Anybody else? No? Okay. Well, what will I do? I'll trade SoFi. I'll buy some weeklies on SoFi. I'll buy some weeklies on Hood. Things that are outperforming, right? I'll buy some weeklies on NVIDIA. Keep adding to my TLT. I don't know. That's about it. I'll wait for one of my members here. Yeah. Yeah. That's what it says if it's on your end. I don't know. Okay. It's on your end, guys. I don't know. It's not me. I don't think it's StreamYard. You guys are seeing me, hearing me, so I would love for you to come on. Maybe you have a firewall on. I don't know. I mean, a lot of people join our other live stream. They have no problem joining. I don't know. Maybe you need to pick a mic for your Safari. I don't know. Well, I'll wait. We'll wait. Patient. I got another 15 minutes. So there we go. We're kind of bouncing a little bit here. There will be some buying at the end of the day. I could tell that because of window dressing. There is quarter end. You know how they do that, right? Yeah. I never understood that, but it happens quite often. I will not buy anything today, though. Not going to happen. Why buy anything today? Plus, you're dealing with 2 more days of decay. No, no thanks. No thanks. No thank you. Yeah. That's the 2-minute. This is the 10-minute. 2-minute 2-minute 1 day, 10-minute 10 day. I mean, there you go. And intraday, this is what I watch. 1 hour, 60-minute, 30 days. So yeah, let's retest that. Let's retest 5,500 on SPX. It's not too far. 1%, not even 1% away. What is that? Yeah, less than 0.5% away, really. Not that far. Let's retest. Triple Qs are definitely retesting. Yep, triple Qs retested actually. No, not yet. It's like maybe 0.25% to go, or almost did, yeah. So, but I'm just going to pick my outperformers. It's going to be Hood on the long side, probably weeklies. Well, it go to 35, then I'll buy the stock, but then I'll trade the options on this. Hood, 10-minute, 10-day. That's the ones I trade weeklies off of. And I trade 0 DTs off of 1-2. 1 day, 2-minute. That's Hood. SoFi I will trade. I will definitely trade SoFi. Yeah, I mean, there's things to do, man. There's always things to do. I will add to my TLTs for sure. 9017. Yeah, I will add. Keep adding. Goes up, we add. It goes down, we add. Oh, could be. All right. Sorry. I don't think I have anything to do with that. I mean, I know StreamYard does have some problems. So if anybody else wants to grab the link, there's the link. I'll find out if it's StreamYard related, but I'm online. I'm doing it, so I don't know what it is. But anyway. All right. So you guys have a good weekend. Wish me happy birthday. Tomorrow is my birthday. Year older, year wiser, hopefully. March 29th. My son's was March 23rd. I'm March 29th. My wife is coming up. We're all Aries in this house. You guys can imagine that? So, yeah, tomorrow is my birthday. On a Saturday. Let's see where the family takes me with my money for birthday dinner. It's like Christmas. They buy me gifts with my money. It's kind of cool. Yeah, I'm giving you a second. Happy birthday. Happy birthday. Thank you, guys. Sean, you should come to Kerbivore on April 11th. Go get your ticket. Oh, he did. Somebody just showed up. Okay, let's add it. Circle, circle. I don't like the circle. It's your internet. Something's wrong with you. I don't see you. Circles. Oh, I hear you now. I think it's your internet. I don't see you, but I kind of heard you. Yep, there he is. Mr. Frozen. It's your internet for sure. Well, up. Okay. Well, when I see you, I'll do it. I try. I know you did. It's your internet for sure. Something is up with your internet. It happens. I see your um, posts. So anyway, yeah, tomorrow, birthday. Life goes on. I feel good. My mind is sharp. I think I know what I'm doing after 30 years of doing this. And I explained everything as well as I could. So, you know, power hour. And I'll be back on Monday. Oh, maybe I'll trade the zero DTs on Monday with you guys. I'll be back on Monday for trading with Sergio. I'll give it a shot, you know. I'm not going to go crazy with it. I'll do some small lots here and there with the data that I'm seeing, not charts, data. Charts don't mean shit in this type of market anyway. We'll still look at charts, don't get me wrong. It kind of works. I mean, basics are still there, but otherwise, careful. All right, keep your powder dry. Oh, I didn't mention it. Well, okay. Well, he's he's here. He's here. He's here. Here.
It worked. It worked. I was connecting to the Wi-Fi, so
Yeah.
I was on my phone. First of all, happy birthday! I hope you have a great time with the family. That's really really important. And I'm in my new office, as you can see, the green screen for the videos and all of that good stuff. So
Congrats. Congrats.
yeah, no,
Congrats.
the business is doing really well. I'm impressed. I'm a little impressed and scared at the same time
That's
because it's
good.
doing maybe too well, too quickly.
No, but there's no such thing. So that means you're hitting a need. So
Yeah, no, no,
okay. Listen. Don't do the paper hands in this now.
no. We're all in on this TLT. This
No,
TLT
not
trade.
that. Forget. I'm not talking about trading. I'm not talking about trading. In your business, don't do the paper hands.
Oh no,
Don't
no. As
don't
a matter
think
of
why
fact,
is this
I
so good? I'm like, that's a good
you'd be
problem to
very
have.
proud. You'd be very proud of me.
Okay.
So I got a call from my boss this week. From
Okay.
my boss from the company I used to work for.
Yeah.
For those who know me, I used to work as a VP of marketing for a public company. I
Okay.
quit because I
Okay.
wasn't happy.
Okay.
And she offered my job back. She's like, please come back. And I said, absolutely not. I'm very happy with what I'm doing. And what I told her was, if you want me to do some consulting at an increased fee, I can do that. So no paper hands. The decision is made. My wife, my wife, when I told her that I had got my job offer back, she was like, "Well, but I said, "No, we're done. I'm not doing this anymore." And
Congrats.
by the way, TLT trade, not financial advice. I think that's the best trade in the market right now, just because the government, bill for the treasury bills is going to come due and they have to lower the rates. There's no way they'll escape an $8 trillion payment, a pretty ridiculous payment. They're really scared of that payment. A lot of people really like, I've been reading about it, and there's a little bit of panic because the cows are calling home right now. It's a lot of money. And our initial assumption that Trump may use year one to tank the economy to get what he wants done, I think it's happening right now. I'm very surprised today was such a
Actually, I
bad
think
day.
I don't think he has to do anything. I think the consumer is going to do it for him anyway. So
Yeah,
like,
but you know what's really incredible, Serge? I look at it today, and this is a surprise. I thought last week with quad witching day that we were going to have a lot of movement on the options. Nothing happened. This week, final day, market's pretty stable. It just tanks. There's no clear catalyst for the
we
for.
have to disagree on that. I don't think market was stable at all. I don't think it was.
But but it hasn't moved as much as it was moving before.
No, but I think it market showed its true colors, its weakness actually by not being able to rally anyway. And then on the first sell button, it was like there the doors opened again. So you can see how when the selling comes in, how aggressive it is. That means it's not done. We need a capitulation day. We need to make lower lows. We need a huge candle, we need something. And the VIX, by the way, see, I think people are reading this the wrong way. VIX is not stable. What I think is happening is that, see, VIX went from 28 to 18. Market just rallied this much. Next time VIX goes to 28 to 30, market will be at a lower low. And when VIX explodes one time above that 30 and goes to 50, that's going to be our short-term bottom day or maybe long-term bottom day. So
Yeah, I
I'm
think
waiting for that. So
yeah. So a couple of things that I would add to that. So number one, people are not buying puts yet. If VIX is not going up, the put buying is going to start climbing, right? I really look at the VIX 1D, which is the VIX 1 day move.
mhm.
And especially because I'm an SPX trader, I love that you're going to dabble in SPX.
I am.
But oh, it's awesome. I think selling. So one of the things that I don't agree with on SPX, and I'll give you my thoughts. Selling iron condors, in my humble opinion, is a losing proposition. It's fairly easy to smell the trend in the first hour of the market and sell behind the trend. As if it's going up, you're selling puts. If it's going down, you're selling calls. There will be
No,
days
I
that
wasn't.
obviously.
I wasn't. I agree with you. I wasn't going to do Iron Condor from the get-go, right? Because you're going to
Well, you
get
can
into
like, yeah,
trouble. Like if I
yeah,
did an Iron Condor this morning, I'd be in trouble already. So
of course,
I will leg in though, right? So let's
yes.
say, and then end up with an Iron Condor at the end of the day, maybe. But mostly, I'm just going to do cash secure. I'm not cash secure. Put credit spreads, call credit spreads. If the data is telling me it's negative delta today, I'm just going to keep selling calls, call credit spread, and then keep rolling it down a couple times, maybe with zero DTEs, and then close them up. The key, I think, is going to be I don't think I will hold them to expiration unless it's so obvious. And I think I will just take like 40 to 60% profits, and same thing on the loss end, and make sure I'm more
So
right than wrong, 7 out of 10 maybe, or something
so
like
let
that.
me give you the numbers, because I've done a lot of back testing and I have a lot of knowledge on that one the zero DTEs. When you hit 25% profit of your position, it's time to put a rolling stop on it, because the data tells me that the earlier you get out of the position, the more profitable you are. So around 25% is an ideal profit taking. There's some conflicting data on whether you should put on more trades throughout the day. I disagree with people that say, trade until 12 o'clock and don't put more trades. I don't agree with that. I
Okay.
think you can put in trades. The only thing that I wouldn't do, because the market moves too fast and gamma will kill you, is last 30 minutes you shouldn't have any open positions, because
Okay.
you will have a winning position go red very quickly at 3:30.
Okay.
But if you put in a position at 25%, you put a stop and you put a trailing stop on it, because you want to continue collecting the money, but you never want to lose that 25%
Okay.
number, right?
Okay.
I usually trade, that's my style. I trade 20 wide wings on the credit spread and the put spread, and I trade without a stop.
Well,
I
I
just
will
let
not
it
put
go.
stop. I trade without stops anyway, but 20 wide. Wow, that's pretty wide,
20
man.
wide, because I risk 2000, and the CVAR on the trades, meaning the highest
Lost.
my CVAR. I just want to give everybody what it means. There's a number of occurrences I will have a big loss. The CVAR on a 20 wide credit spread is about $1,500.
Yeah,
So I
max
should
loss. Yeah.
ex- I should expect to take a bath in about, like, I'm gonna say, I think CVAR is calculated with 50 positions. I should be okay taking a bath in one position and losing $1,500. right? So I usually do 20 wide. I only do spreads. I leg into my trades. I use market internals to kind of give me the lay of the land, and I use gamma is huge for is huge for this trade. So one great way that I'm trying to learn, and I'm paper trading in a little bit, is using gamma to open butterflies and try to pin the market. So
Okay. Mm,
so in a really high gamma environment, you could open a butterfly and set the tent exactly where the gamma is, and the market will drift towards that number. Hopefully you pin it. If you pin, you make a gazillion dollars, right?
yeah.
So there's like zero DTE. I'm telling you, look at me. Walmart, I did, really low credit. I sold the puts. 3 weeks later, I'm getting assigned. Talk about Nike, right? I got assigned at $70, right? Now it's tanking. It's a long-term trade for me. I'll let it go. I have a number. I have a number that I'll pull the plug on the trade, but right now that number is not there yet. But everything else is cash, right? So I'm waiting for the TLT trade. I made a mistake because I wasn't in front of my computer when it was 88. It was the perfect time to
No,
go
I
a
mean,
bit heavier.
I look, I decided that's going to be my main idea this year, but it requires patience and it's got to be long term.
Of course. One
And
thing that I disagree with you is I am a little bit more skeptical on the time horizon. I think it's going to take a bit longer to get there.
okay,
So, so I probably, if
go to June.
when I get in, I will do the furthest out contract possible on the leaps, because I really think it's going to take a while for the market to capitulate and for the government to really start lowering the rates. I think it's a end of 2026 proposition,
Okay,
but I
then
don't
you
know what's
can,
the latest,
but it will
the
be, but
longest.
but the market's going to move before, right?
I
Then
hope I hope
I
that,
mean,
'cause then you can come out of the trade earlier. Of course, of
yeah, it's going
course.
to take. I think I will not wait for 110 to get out of the trade, but I think by March doing. I looked at Junes that weren't that good, so you could do Junes, but this is a trade that I'm willing to commit literally half my account size on this, and
No,
I'm going to keep
I'm
adding.
with you. I don't mind, honestly speaking, Serge. I don't mind owning TLT at 85. I'm completely okay with 85. So I'm comfortable putting in a decent sized trade. I'm going to leg in about 5 contracts every time I see an 8 before the TLT number. I'll leg into it.
Yeah.
This week was just a busy week, but the time horizon for me, I feel there might be an opportunity, for us to be a bit more patient on the tax coming down, the interest rates coming down.
Yeah.
And I think something else that we're going to see is, from a long-term perspective, and looking at companies like Nvidia, Apple, they're really amazing companies making a gazillion dollars. If we capitulate and QQQ is down, let's say in the 400s, right? We're looking at probably another 10% down, right? 10%, maybe 15%. The TQQQ trade will be really attractive.
Yeah.
And
Oh,
Soxel, you know, my biggest winner last year was Soxel.
okay.
I bought it. I bought it at no options, just straight. I did it on my IRA. I bought it at around like $9, and I closed my eyes. When it got to like 40, I said, all right, I'm going to bail on the trade. This is ridiculous. I got out. It tanked again. But with the tanking, Soxo is going to become a pretty interesting trade. So TQQQ, if we see a really massive gap down, the prices get really low. And if you have a small account, you're going to have a chance to trade these
Yeah.
underlyings. You're not
Well,
trading a $400 underlying, but you can trade the TQQQ and be okay with it, right?
I
But
think
you
that's
don't want
what.
to trade on the way down. You need to wait
No,
for the
no,
T for.
no. I mean,
You
I
never
did.
want to trade on the way down.
I sold puts last month, and then 10 days out, that thing was in money, out of the money, in money, out of the
I
money, like
remember that.
12 times. I'm like, no, this doesn't make any sense whatsoever. So now I will just do the underlying period, because like, I shorted Hood on Monday, Tuesday, not major, few hundred shares, and then I bought them back, right? I'm just not going to mess with directionals on options. If I do mess with directionals on options, I'm just going to go much shorter term now, as opposed to going a month out and doing things like that.
Yeah.
Go closer to the money. I go shorter term. And look, on TLT, it's going to be like my core position, and because that's my core thesis. I don't have any other thesis, honestly. China is still a good thesis for me. I think it's going to continue, but that's kind of related anyway. I think we're going to have a drastic lowering of interest rates, global lower interest rates kind of a policy. It's happening in other countries anyway. We're the
Well,
last
China
one.
isn't China zero interest. Like China is gonna be they're like
Yeah,
printing money like it's going out of style in China,
yeah.
right?
China 10 years under 80 basis points.
That's crazy. That's
Well,
absolutely crazy. It's free money. It's free
yeah.
money, right?
Well, I mean,
80
but
basis points is free money.
to me, it's like the we will join that trend as a US, because I usually don't come across too many things that 3 out of 4 scenarios are favorable to your trade, and there is no ifs and buts. The only unfavorable one, which is the very unlikely one, which is inflation takes off again and Fed actually is raising
And
rates,
after raising, yeah, of course.
which is like, do you know what's going to happen to the market if the
Oh,
Fed
that
raises
no,
rates?
if that happens, I think we're gonna be worried about other things. If that,
Yeah,
I tell people all the time. I remember I was talking to somebody that experienced the flash crash in '87, and they told me, I said, what were you worried about accounts? I said, no, we were worried about being alive because things were so crazy that he looked at the slippage was insane. The market didn't have a breaker. He just went nuts.
the
And
other,
I
okay, I'll
said,
tell you, I'll finish with this because I gotta go. But we had a major. I was on the desk, right? For some
Jesus.
clients, for some big clients, I would like handle their accounts, not as a broker, but as a trader because they were so large. Okay, I think I did say this on the members, but then I'll say it today here on the regular channel. I mean, regular stream. So I had this doctor, surgeon, Egyptian, gambler. And for all that time, all the way to 87, he would do just nothing but sell puts. Just sell puts. Just sell puts. Just every month. Because we didn't have weeklies then, we didn't have zero DTs, we didn't
Yeah,
have
it's
any.
all they were monthlies
Yeah,
back
like
then,
he
of
would
course.
sell puts, and he would mostly do it on like companies he knew, and he dealt with like Merck and all the medical stuff, right? I was just printing money. I mean, just month after month, year after year, print money, right? So for those days, those 80s, early 90s dollars, we're talking 8-digit account.
Jesus
Okay.
Christ.
Okay. So that's like, I don't know how many digits it is today. Long story short, we are short puts like
Everywhere.
like nobody's business, right? So 87 comes, we're tanking. I'm looking at the account because we're not going to lose money on the guy, right? That 8-figure account is going down to zero.
Yeah, for sure.
Zero. And I go to the risk manager. I go, listen, we got to cut this off. He goes, okay, liquidate. I'm like, we didn't even call the guy. We didn't even, in those days, but I don't have time to call the guy. I'm calling, other desks to buy the options back.
Yeah, you're trying to liquidate, but they
I
want
don't
to
know.
automatic trading, of
Nobody's
course.
picking up the phone. Nobody's picking up the phone. And I was like, mother effer. That shows you selling cash secure puts or selling naked puts on a market like we have today. It could be very detrimental to your health, financial and mental. So
Yeah,
be
no.
careful selling puts in this type of market. But
Yeah, I think what's really important if you're selling puts, you need to sell on things that you want to own. You say it all the time. I repeat it to everybody, right? And when things are tough, if the companies are good, you should be okay, right? But if you're selling puts on games, on GameStop, GME. This week was GME week. They were freaking out again, and I said, "What's wrong with these people? forget about GME. And there were, and I still people talking about it. Don't get enamored with these, high beta stocks. Buy stuff. If you're gonna buy something, sell puts on stuff that's really stable, right? I wouldn't have a problem anybody taking a shot selling a put on Nvidia, for example, because it's an amazing company, right? Read the chart, take your shot, but be okay owning it. It's not time to be, getting cute because the options are super expensive. So you're getting paid for the risk, right? And it's only going to get more expensive. It's just doing debits right now is really not the vibe because
Yeah.
of the expenses. The options are going to skyrocket in price.
Yeah. Well, I mean, I think, hopefully people will understand and learn. I was on another stream actually a couple days ago, right? And I was on that stream when I was shorting Palantir, and I got heckled. So I was like, so I go back, I go, who's the sucker now? Which one are you still holding Palantir? But no. What I'm saying is, like, this time I said, and one of the guys said, it seems like you're happy the market's going down. I go, no, I'm not happy the market's going down. I'm happy that you guys are experiencing it. I'm not happy the market's going. Okay, I'm still up 12, 14% for the year, which is fine. But I'm not happy that the market's going down. What I'm happy about is to show these people the other side of the coin. So what worked for 2 years for you on all-time high after all-time high is not going to work. It's just not going to work. So I told him, I was like giving him good advice, actually. I was telling him, like, you have to add tools to your toolbox. There are so many tools that you're just stuck with selling puts. I'm like, that's not going to work. I said, add tools to your toolbox. Learn how to short things. Learn how to sell, call credit spreads. Learn how to do this, because there is a trade, or there is a structure of a trade that fits each picture. But you're a one-trick pony, you're going to get shot and made glue out of. So don't mess with that.
They had the thing that I'm thinking about right now is this week when the market rallied, it was a little bit of a face ripper, and I was FOMOing a little bit, and I said, you know what, I may jump in. But what I was looking for the 200 MA to hold. I said, it looked above, right? There was one day where the SPX was above the 200 MA, and I said, if it holds, I enter. It didn't hold, so it didn't look above below, look above and fail. And the next day, I think it was a negative 1% day. I look at IWM. I usually use IWM as the barometer of how things are going, because it's really kind of a risk on trade. And I looked at IWM and I said, oh, it's gapping down, it's gonna fail. And said and done. I just didn't think this. I really was expecting this big move today. I was expecting a softer close to the week, but very surprising. But people
Well,
were just,
at the end of the day, we may get a pump because there is quarter end dressing. So we may get a little pump
yeah.
at the
So
end of the day.
they need to buy stuff. They need to have the accounts.
Yeah, they need to
They
buy
have
some
contracts
Nvidia.
to maintain the
That's why you
accounts.
could tell. Like, that's why you could tell Nvidia is only down like $1 when the market's down 2%. Otherwise, it'd be down 8. So you could tell what they're going to buy, right? So my thing is not that. Out of all the Mag 7s, by the way, I'll finish with this. If Google gets to 150, I may actually
Oh,
buy
it's
the
amazing. 150 is
I think
amazing.
I may just buy the damn thing. Just in my long-term investment account, I may buy the thing because I wanted to buy Kava. I couldn't buy Kava. I sold the puts and they expired worthless. I want to buy Kava. I want to buy Google. Just put it away. But on the trading side, I'm just going to keep adding to TLT. Goes higher, I'm going to add. Goes lower, I'm going to add. I would prefer to do it with credits, but then if it gets away from me on the upside, I'll just use different strikes and just keep taking money in, because that's a trendy trade. That's not like your Robinhood that goes from 30 to 60 to 30.
No,
It's
you
gonna
gotta
be,
wait. You gotta wait. Really
you
patient.
gotta
Yeah,
wait.
no, of course.
You gotta play it out. So yeah, well, good to see you, man. I'm glad everything is working well.
Well,
Um,
I'm very happy. I think the most important thing is, your patience with the group, and your mentorship is absolutely phenomenal. We thank you for that. and really, really enjoy the birthday tomorrow. And I'm in the same boat as you. Every time somebody wants to buy me a gift, I say, please don't, because it's my money.
Exactly. Exactly. We're gonna go have like sushi tomorrow, $400 sushi for 5 people, and it's my money. I'm like,
that I went on a my birthday dinner was like $450. I'm like, that's my money. Nobody's spending their money. I
the
don't
same
want to
thing,
go.
bro. Let me tell you, birthdays, Christmas, same shit. You just buy shit with me for my money. I just don't want anything. Just you buy it for yourself. I don't want it. But anyway, so thank you. I appreciate it. So he's one of my members. You can, I am patient in the chat. They're all kind of disappearing now because I think a couple of them blew their
Everybody's
accounts
scared.
probably. Yeah, it's quiet as crickets in the chat now. So, but if you guys want to become a member, go join the member group. I think it's good stuff, and they're new, man. I don't know what to tell them. I mean, they can do whatever they want. It's their money, but ultimately, I mean, you're dealing with a guy that's seen all these movies, man. What else is there to say? I mean, I don't know.
I think if you're looking long term, one thing that always works is dollar cost average into VOO.
Yeah,
That's the dollar cost average, not into SPY. Dollar cost average into a low load ETF like VOO or VTX, and just close your eyes. Like everything is gonna be okay, right? And the way to dollar cost average, every negative day you buy a little bit, right? It's red, you buy it. It's red, you buy it. Or make a commitment every week, right, to buy a number of shares. And long term, the market always pays off. You just got to be careful, right? But dollar cost averaging has been the recipe. But we're down 10. I was a little surprised when you told me you thought we had another 10 to go. I'm starting to believe it now. I'm starting to believe that we might have another 10 to go, 10, 15 to go.
I think we're 4,800 to 5,000 is going to arrest this. That's what I think we're going to go.
That's pretty crazy. That's pretty crazy.
No, not really, because if you look at your long-term charts, that's where the support is at. I mean, but forget the charts. I'm looking at also. See, this is the other anticipation I have, which I think is going to happen, is the Spider or SPY or SPX earnings are supposed to be, the average is about 260 a share. Okay, there are low estimates about 240, high estimates as high as 270, and at 260 we're at 21.5. In order for the 21.5 to stick, see, I just made up another scenario why the TLT is going to work. In order for the 21.5 to stick, interest rates have to go lower to put a higher PE on it. Okay, and the average PE is 16, 17, 18, let's say, right? But if the earnings are not going to make it, if 260 is going to get cut to 240, 21.5 is not going to happen either, because when the earnings are being reduced, PE is also automatically going to be reduced, right? So I see 480, 4,800 to 5,000 on SPX, and I see about probably 4,100 to 4,200 on triple Qs, and that's where we're going to go.
Yeah, the PE rate, right? The PE ratio right now is 24, right? Should
21.5. Well, I took 260 and divided it after the 10% with the 5,600 that we're at. We're at 21.5.
Yeah, Google at 150. You're basically buying Google with a forward PE ratio at 15. That's ridiculous.
Well, that's in case the earnings are there. See,
of course.
Look, the stocks are going to go down in price first, then earnings are going to go down. Just like when the stocks were going up, earnings would beat. I guarantee you this coming quarter, there's going to be a whole bunch of misses. But stocks are already being sold because of that anyway. And if they're not misses, then that's when the market's going to bottom. So,
and you know what's going to happen also, Serge, is that a lot of companies do a lot of playing around with how they report earnings, and they don't want to give bad news to the market, so they kind of play with the accounting. They I think Munger used to say that EBITDA is the funniest looking metric for the performance of a business, and I really think that if we have a pretty interesting drawdown, companies that need to give some bad news, that's the time, We're down. Who cares? Let's unload. Take a
Well,
quarter and
okay,
unload all the bad stuff right away.
okay, so okay, the last 1 minute. So on the way up, what were the companies introducing into their earnings reports, right? For 2 years, AI.
AI, of course.
You had nothing to do with AI. You just put AI in the earnings, like 40 times stock will go up, right? So now the negative is going to be the T word, or tariff, right? All the earnings reports are going to be full of tariff. Because that's what companies do. When shit's not hit the fan, they blame something when the shit's good. Although there is still a lot of bullets out there with buybacks, right? So you gotta, there's gonna be supporting. Look, the Fed's not gonna let the market go down 30%, looking in the whites of their eyes without cutting rates. So I'm going like, it's like, I mean, today's move on TLT, by the way, I think it'll get erased tomorrow if the market bounced. It's pretty much flight to quality today, you could tell. But that's another indicator that's going to be for me to add, because if the market goes up and TLT keeps going up, that's when you put the gas on that trade.
Yeah, because then the bond market is calling bullshit on the move, and if the bond, I think everybody needs to know the bond market is always right. Period.
From what I know in 30 years so far, that's what I'm like.
The bond market, you could read your charts, do whatever. The bond market never lies. The bond market is it.
Yep, that's it. All right, buddy. Have a good weekend. I'll see you when I see you. I'm glad everything's going well, and yeah, we'll see where we go. It should be a fun year, though.
Now, have an amazing weekend, everybody. And if you're driving, be safe out there. You're the best.
Thank you, buddy.
Bye.
Bye. All right, everyone. I'm going to answer this for Vic if he watches it later. What data are you using? It's called Quant Data. They're out of Vancouver, Canada. Amazing Discord, actually. Free. No, I'm paying for it, but you don't have to. And you don't need to be a guest. You don't need to pay anything. So Quant Data. But you should know your Greeks really well before you go there, because otherwise it'll go over your head. He's disagreeing. Wasn't disagreeing. He was like talking about the timing of the DLT trade. Anyway, yeah, Quant Data is great. So, all right, I'll see you guys. I'm gonna take off. We'll have a cup of coffee and see where the market's at. Bye now.